Atul Suri, Chief Executive Officer at Marathon Trends-PMS, is right here with us in the studio. Atul, thanks for joining in.
Morning.
How are you feeling today?
Good.
That's
a great answer.
The market's feeling good. And I remember the conversation we had the last time you were here, right? Eternal optimist and very bullish on the market. You think it's just a matter of time before we get over all these global cues and move forward?
There's a lot of negative global news. But what's the market doing? The market's actually saying that it wants to go higher. You know, there are 4 big global macro issues, right? You've got Ukraine war, which was supposed to last for 3 weeks. And I think we'll get into year 3. You've got now a new thing in Gaza happening with Israel. A lot of variables can open up with Iran, Lebanon, etc. And the world knows about it. Oil, which is of course linked to all this, you know, always tends to like sort of zip up, OPEC plus cartelizing. And these things are just, you know, kind of playing out. US bond yields, obviously, the biggest elephant in the room. In spite of all that, you'll realize that what is the market doing? The market is clearly sort of saying that in spite of all the bad news, it's tending to wanting to go up. And I think that's very important because the market has a mind of its own. And I think that there's a lot of pessimism. I think the market is very oversold. We've had a correction globally, 6 to 8% among the larger indices. I do think that in spite of what happened in Gaza and Israel, the markets are trending higher. In fact, crude after a spurt also is tending to come off. So I kind of believe that the markets want to go higher. As I said, these are big moving parts. No one knows the answer, right? We can discuss and talk about them, but generally nobody knows the answer. Nobody knows the outcome. But in spite of all that, our job is the market. And the market is at least clearly telling me it wants to go higher.
All right. Hi, Atul. Morning. You know, the trend seems to be up and you've been maintaining that as well. But I think the ultimate target in the near term, you're looking at 21,500.
Yeah.
You maintain that, and how soon do we get there?
Soon is, again, you know, these things keep happening and surprises keep coming.
Financial year, this financial year?
I would think so. I would think so. As I really think that it's not just India. It's not just, of course, India is the star. But the fact is that you'll find globally markets are tending to push higher in spite of all the bad news. The issue is that if these bad news start revolving, any one of the 4, you'll find that that can become a very big trigger for markets.
It's a type of the trend, you know. He says the markets are oversold while we're actually just 2% away from a record high. So that's only telling you that how much of an optimism that there is.
Yes, you see our correction also, how deep was it? 4%,
Exactly.
out of which we've recovered 2%. I mean, with 2% from lifetime highs, you know, where is the scope of being so bearish? But the narrative, the mood, I mean, if as I said, you know, if you really want to get depressed in life, watch all the political news channels, right? They're depressing as hell. But the fact is our markets are doing a different thing. And in fact, when there's general depression and pessimism, that becomes an opportunity for investors.
Okay, so let's talk about opportunities and risks. What are the areas of discomfort for you and what are the areas where you find some opportunities?
I think that what I see, the trends that are playing out in the market in terms of sectors and themes, I feel that the whole, you know, infra play, the whole capital goods space, we've seen them moving, but I think there's a lot more to go. See, one must remember that these sectors have not moved for a decade. The last decade belonged to private banks, IT, you know, something like a Reliance, etc. These sectors have not done well for a decade, like PSU banks for that matter. They were the dogs since 2008. So what is being seen is that there's a bit of a rotation that's happening out. And you'll find that these sectors were underowned, underrepresented. A lot of companies which were not good enough got eliminated, and just a handful of them are there. And whenever the industrial cycle turns, these guys are going to be disproportionate beneficiaries. So I do think that, you know, the market is going to reward these things. They have run up, so people, you know, get skeptical and say, oh, they are valuations are high, etc. But I do think that they'll surprise as far as earnings go. And I feel that these will be a larger trend playing out. Yeah.
Okay. By the way, for the market, just one word, right? It's not too bad at all. It's still holding, but the mid-cap space is really picking up pace now. So 160 points higher on the mid-cap index and a lot of individual stocks. Autos is clearly the flavor of the day, as it has been in the last many days. So today as well, Tata Motors, Hero MotoCorp, M&M all in the green. But Atul, what is the texture of this market looking like now as we head into some big events, right? Like the general elections over the next 6 to 8 months. Is this a market that is uninterrupted on the upside? Or do you think that we could see some amount of time correction before the next leg up?
I think that's very possible. Politics is definitely a very big thing, you know. whether we like it or not, one of the reasons for optimism, buoyancy in India is always that kind of continuity in the politics that we have experienced. So I think that state elections will come up. Now, I really don't know how much it's going to affect, what is going to be the outcome. There are too many variables. But you're right that they could act as speed breakers. And if the market starts believing that, there could be a change in the general elections or there could be problems and all, again, as I said, I'm not a pundit at that. I think that mentally it could affect because it's a very big positive play for that. So one thing I'd like to address, prior to that is this whole mid-cap, small-cap rally.
Yeah.
I think the biggest concern for everybody is that, boss, there's a bubble here. So we kind of did some work on that, and I'll just share that with you.
Sure.
My understanding is that the reason why mid and small caps are moving is the sectors that are moving actually have hardly any representation in the large cap. So when I spoke about infra, when I spoke about capital goods, when I spoke about engineering, they haven't done well for a decade. And you'll find that there's hardly anything, they have hardly any representation in the large cap, barring probably an L&T.
L&T.
Yes.
So if money has to flow to these sectors, by default, it will move to the small and mid cap space. On the flip side, if you see the large cap space is dominated by three sectors. That is your private banks, large cap IT, and oil and gas space, which is more than 50%. And here also there are 5 stocks.
Yeah.
So you're saying that the alpha can be generated in the mid-cap space over the next 6 to 12 months?
Yeah, so what I'm trying to say is that, that just because they have run up doesn't mean that you need to be worried about them and, you need to do that rotation. The reason I think they're there is not because they are small or mid-cap, but the sectors that are trending find representation there.
Yeah.
And the sectors that are actually, sort of cooling off or not doing much are the 5 stocks, Your TCS, Infosys, Reliance, HDFC Bank, Kotak Bank.
The Ritik stocks that they call them.
Yeah, whatever.
HDFC Bank, Reliance, Infosys, TCS, ITC and Kotak.
Yeah, so since they are resting, what will happen is that the large caps will seem muted. But I think it's more a sectorial themes and trends. And these sectors have representation in small and mid caps. That's why you'll find that space doing very well.
I think you track a ratio as well, a large cap to small cap ratio. Where does that stand and when does it indicate that maybe we're getting a little too bubbly, so to say?
So we are not into the historical highs, but definitely things are, sort of on the upsurge there. But again, we look at them from 6 months. If you start looking at, the last year what happened was the Nifty was up 3-4% or something. The small cap index was down 14%.
Yeah, it's true.
So what happens is that very often when you take a longer term perspective, you'll realize that sectors and themes tend to churn.
Yeah.
And there is a catch up that happens. So this is nothing but a very big catch up happening in sectors and themes which didn't do well for a decade. And because of that, most large caps have become mid caps and mid caps have become small caps.
Right.
So money is actually flowing to those sectors. That's why you'll find that space in the market is going up.
Let's talk about the heavier names, the private banks. Some of these banking names actually have underperformed. And just to drive home the point with regard to the way the small caps have bounced back, if you pull up, a year-to-date chart of the Nifty as well as the small cap index, first 3 months the small cap index was underperforming.
Right.
From there, big outperformance out
Right.
there. But let's talk about the bigger constituents, the banking names. How do you see them play out? I think in the past we have been talking about banks, NBFCs and PSUs. We break that up. What's your preference now?
So in my portfolio, in fact, the large private sector banks don't find much representation.
Okay.
There's an overweight in the NBFC space.
Correct. Yeah.
Because I feel that there's a lot happening. And, with tech, the dynamics of this industry are changing. I mean, the way we use, you guys are talking about food, ordering. It's even in terms of the whole digital payment sphere.
Right.
So you'll realize that there is a lot happening. And the action, I think, is going to be more in the NBFC space, where there is niche-based work, there's a lot more tech involved, and that's where there's more consumer traction. The big guys are great, they are fantastic, they'll be around, but they're going through a period of rest. They've done well for 10 years. They have the biggest wealth creators for a decade.
Yeah.
They need to rest. If they rest 2-3 years, it's not a problem, because when they do break out after that, I'm sure that the tide will move in their favor.
Taking a cue from that, talking about the tech space itself, we have large cap IT, we have mid cap IT, and we have new tech, which I would, call the Nykaa, Zomatos, Zappos, all of them in that vertical. How would you position yourselves in the IT space, mid cap, large cap versus new tech?
So I'm a trend follower.
Okay.
I find myself overweight in the mid cap IT space.
Okay.
Because as a trend follower, we look at two things. We look trends in earnings, or strength in earning and strength in price.
Right.
And you'll clearly see that there are some mid cap IT stocks which are delivering fantastic numbers, and it's being sort of reflected in the price. So I'm likely to be in that space. I like the large caps, but I'll wait for them. I'll wait for them to deliver. I'll wait for the price moves to happen. As far as the digital place goes, I think there are great opportunities for individual investors, people who have a higher risk-return profile and who are able to sit it out. I will wait for a little bit of more confirmations. I may be late in them, but I'm okay. I'm okay because, I don't have the capacity to see 50% drawdowns and things like that. When I go back in history and I realize that the biggest in the US, what we call the FANG stocks, these companies were listed for very long. And they didn't make money for investors, whether it's an Amazon, an Apple or a Tesla. The fact is that whenever these companies started performing, they started giving numbers, the runway was big. I mean, the great Warren Buffett trade. He didn't buy Apple at a nascent stage. He bought it at a very, very mature state. People thought like, oh God, this is so unlike him, buying a stock after it's moved up many times. But post that probably is this biggest wealth-creating trade ever.
Absolutely. Okay, one last question, because it is the flavor of the moment on the downside. TCS, when a management themselves comes out and says that, the things are uncertain, demand is not picking up, you want to be cautious there. But how are you feeling about this space on the technical side of things? Is there a good buy on dips opportunity here for the long term?
See, there are, as I said, that the large and mid-cap space. At the end of the day, as a portfolio manager, I have limited bullets. I have 20 bullets, right? And maybe I would like to allocate 3 or so, maybe a 15% or a 20% allocation to IT. Where am I likely to be here? In these spaces, one does not know, Sonia, how long it's going to take. They are great companies, they will do well. But when they do well, we'll be in it. But at the moment, something else is doing well.
That opportunity cost is
absolutely. There's an opportunity cost, and then we don't know the length of opportunity. Sometimes some of these mid-cap spaces are in such niche spaces, and there's so much changing in the tech world. You never know when you will have a multi-bagger. So as a trend investor, as a trend follower, I find my footprint in the more mid-cap IT space. And as I said, I need strength in earnings and I need strength in price.
Have you put down any of those names on that little yellow pad that you have? The multi-bagger?
No.
That's only for Diwali.
Diwali. I know.
Actually, this Diwali is going to be a really good one, right? I mean, compared to what we saw in the preceding Diwalis, if we were just looking at the numbers, record high SIP flows, Demat accounts. And even if you look at it, I mean, just 8% of Indians still have Demat accounts. So the scope is pretty large if you look at it in that sense.
The SIP flows is the most heartening thing. The most heartening thing. We looked at people like us who've been in the market for so long. We always thought that FI money is smart money and Indian money is dumb money. No. But I think it's going to just change the whole thing. It's the Indian money that's the smart money. And dare to say FI money may be the dumb money.
I mean, we can't put smart or dumb anything.
Money is money.
Money is money. The question is where does it go?
I'll tell you who's driven this market, right? Everyone who's watching. Because the SIP flows have been rock solid. I'll just give a couple of data points. From demonetization, those numbers are up 4 times, the SIP flows. From COVID lows, it's doubled. And I'll be doing a piece later today, so that's why I know that. But thanks so much, Atul, for coming down to the studio.
Thanks for
Catch up with you down the road sometime soon.
Yes, walking down the road.
Walking down the road in your new sneakers. By the way, also
really?
Sneaker.
I just love it. I'm envious of Mangalam.
So what are you sneakerheads buying these days?
He's got a big store right under his office. So he just walks down for a coffee, buys a pair of sneakers and comes back.
I just see the prices and come back.
And then Mangalam goes and buys them.
Mangalam.
Thanks.
All right.